Hello, and thank you very much for joining us today. My name is Randy Wostratzky, a director here at the Spectrem Group, and I'm joined by Kent McDill, our senior writer. Today we're going to be reviewing the latest data and insights from our September of 2019 investor confidence indices, as well as talking about one of our latest in-depth market research reports on defining financial planning. Before we go into the financial planning report, Kent is going to start off by talking about our latest index data. Kent.
Thank you, Randy. I'm here to present to you the results of the Spectrum Confidence Indices and Household Outlook from the month of August. During the early weeks of August, the Treasury note yield curve inverted multiple times. That economic function in which interest rates for short-term notes are higher than interest rates for 10-year notes has historically indicated an approaching recession. The yield curve actually inverted earlier in the summer, but investors took little notice because it only lasted a few hours. This time, the event occurred repeatedly over a week, and investors seemed to accept the warning. One day after the third yield curve inversion, the Spectrum Investor Confidence Indices survey went out, and investors indicated a significant loss of confidence in the American economy as a result. Combined with continued confusion over the state of trade negotiations with China, and uncertainty over the change of leadership in England and its impact on Brexit negotiations, the Spectrum Millionaire Investor Confidence Index fell 5 points to -2, entering negative territory for the first time since January of 2016. The Spectrum Affluent Investor Confidence Index fell 6 points to -7, its lowest mark since August of 2013. Note that 1 year ago, the SMICI reached 20, but that index has been slowly pulling away from that level of confidence over the past 12 months. The top portion of this slide shows the slow decline of confidence over the past year. There were two spikes in those 12 months, but the deep dive in December, when the stock market lost 4,000 points over a period of weeks, as well as the current indicators previously referenced, have created a consistent downturn in the indices. The lower chart shows the results of the indices over the 15 years of its existence, and while it obviously remains higher than when it bottomed out during the Great Recession in 2008, it will be interesting to see what the next month brings following 2 months of downturn. An interesting point about the August indices is that investors are not backing away from investing overall. They are increasing their allotment in bonds, cash, and mutual funds, while individual stock investing dips only slightly. You can see the interest in bond mutual funds had the greatest gain among investors. Not shown here is the category of those not investing, which is investors who are not adding to any of their allocations in the next month. For August, the percentage of millionaires not investing actually dropped by 5% from the July percentage to just 29.2% who are not investing further. Among non-millionaires, the percentage also dropped by less than 1 point to 46.9%, which means investors are still investing, they're just being very selective about what they invest in. The Spectrum Household Outlook is a measure of how investors feel about the future regarding 4 components of their household finances. In August, the outlook in all 4 components fell, a key component in the drop in the overall confidence indices. The decrease from 24.7 to 8.0 is the largest one-month fall in the outlook since August of 2012, and it's now at its lowest point since February of 2016. It is rare for the Spectrum Household Outlook to sit outside of the 10 to 30 range as it is now. This chart shows that all 4 components saw a drop in outlook from July to August and are down from where they were 1 year ago when both confidence and outlook and economic conditions were very high. The outlook for the economy dropped 26.4 points and landed at a negative 25.20, its lowest setting since November of 2012. But all the components saw a double-digit drop. When investors were segmented, the outlook among non-millionaires fell more than 20 points, and the outlook among millionaires was cut in half from 25.39 to 12.04. That's in the area of the economy. More details about the Spectrum indices and outlook are available upon request. And now I will turn this conversation over to Randy, who will discuss our study, Defining Financial Planning.
Thank you very much, Kent. The Defining Financial Planning Report was just completed here in the month of August in 2019, but was fielded throughout the course of a few weeks in both May and June. It's part of our series of reports in both our Wealthy Investor series as well as our Wealth Spectrum research program, of which we do 6 throughout the course of the year. And this is the 3rd report in each of those series. As you can see there, sample size of over 1,600, so very robust number of participants that we have. And as always, with our Wealthy Investor research, these are folks who have anywhere from $100,000 up to $25 million in net worth, not including their primary residence. We're looking at about 3/4 of these respondents that currently have a financial plan in place. And you see there only 11%, they don't ever plan on having a financial plan, pun intended. And so this is something where obviously it's become a cornerstone of the advisory and wealth management and planning business. And it's something that it's integral to those, even those that are on the lower tiers of wealth. And so this is a strong majority that, again, already have the plan and do plan on at some point in the future incorporating one into their holistic financial blueprint. So this concept of having a financial plan is something that should always be at the forefront from an advice standpoint. If you are an advisor or representative that deals with a face-to-face with a wealthy investor. Now, he asked questions about what was the initial kind of reasoning behind the creation for a financial plan. These were mutually exclusive in nature, so you had folks that could select multiple here. And certainly by far and away, you're talking about planning for retirement as the number one aspect for initiating that creation of a financial plan. Many folks that once they develop wealth over the years do as they get closer and closer to retirement age, realize the need for a financial plan, not just the income leading up to their retirement date, but certainly then how they're going to live on a day-to-day standpoint from a management of their finances once that retirement date hits. And so that is the catalyst for creating a financial plan, certainly quite high. Obviously, planning for the future and having a financial advisor tell you to get one started is good. I was a little bit surprised to see that only the advice of family or friends was down at 4%, just because that's such a huge component when we talk about the referral process and how folks meet an advisor for the first time or a financial professional for the first time. It's due to a referral, a recommendation from a family or a friend. And many times one would think that throughout that conversation they would talk about some of the things that they've done with that financial professional. And so to see only 4% here created that financial plan based on advice of family and friends, it's a little bit low. Here you can see that the actual kind of perceptions regarding that financial plan are very positive when asking about it's helpful in reaching goals and then certainly talking about it in meetings. We asked throughout the course of their relationship with their advisor about the time that advisor professional has spent talking about that financial plan. Again, a little bit shocking to see that you had over a third have spent less than 2 hours talking about and explaining the financial plan. That's something, when it comes to a financial plan and that blueprint for managing one's money, it should be revisited quite often. And it's something that doesn't necessarily have to be adjusted. It's something where you just want to make sure that you're always on the same page and talking with clients about things outside of where their liquid assets are invested, and making sure you know what's going on if they have to all of a sudden take a parent into their household, and that's going to change the way that they allocate their monthly budget. If they're sending a college or a young person off to a private school earlier in life than they expected, that's going to impact their monthly budget as well. So it's something where it's not about changing the financial plan all the time. It's about making sure that you spend time revisiting it and then revising it when it's truly necessary. But again, overall, clients look to be very happy regarding the financial plan. Now here we're looking at what these wealthy investors think should be included as far as a component of a financial plan and what they actually get. And you see some of the biggest discrepancies there at the top, and certainly tax planning is one of them. They've done a good job, as you can see also on the right-hand side, of the retirement planning, the expectation versus the inclusion, as well as the investment portion of a financial plan. So those two in particular, professionals have done a good job relative to making sure that those topics are covered, both from a conceptual standpoint as well as an implementation standpoint. But again, you can see a number of different aspects that are kind of to be desired relative to things like insurance. You see 85% expect that as part of a plan, and it's only seen in 45% of financial plans. And then other things like education funding. And maybe that has to do with some that haven't yet included that in their plan due to their age, that they haven't felt it was necessary, or the advisor has a specific age in mind to start accumulating assets for the education planning. But again, you can see with almost 3/4 of the respondents that say it should be a component of the plan, and yet just over 10% actually have it included in their current financial plan. When you're talking about the actual creation of that plan, another very kind of interesting implication here, you have a lot of these respondents who took that Home Depot attitude of I can do it myself, where you have over 1/4 that set it up on their own. And there's certainly financial planning software and solutions that are available online to have that happen, but especially those on the higher ends of wealth. You really see a lot of them that turn to professionals for assistance in the creation of that financial plan. And among those who have the assistance of a professional, you do see that specific financial planner, that actual name cited as the person that helped them in the creation of their financial plan. As a reminder, that Defining Financial Planning report and the additional insights that you receive are part of our Wealthy Investor Series and Wealth Spectrum Research Program subscription options. You can see the other 2019 reports that we have listed, with 3 more due to be finished here in the end of 2019 and into early 2020. Also be on the lookout for our 2020 publications calendar. We're going to have that ready here in the next 3 to 4 weeks, hopefully by the end of September 2019. But as always, if there's anything that you need, or if there's any questions that you have about Spectrum and about our research, please do feel free to reach out to us and to talk with us about the types of topics that we're covering, what the implications can mean for you, for your business, and for the clients that you serve. And just always as a reminder about the technology capabilities that we have when it comes to leveraging our data and insights, and the ability to use our visual analytics technology and taking a look at various demographics that may be important to you in your practice. So if you serve and specialize in working with a particular occupation, or if you really focus on folks that are near and close to retirement, there's various ways, again, for you to leverage our technology and do so in a way to make the data that we have and the insights we produce the most relevant for you. So again, anything at all that we can do as a resource and as a company to help you and help your firm, please don't hesitate to reach out. Once again, this is Randy Wostratzky and Kent McDill for the Spectrum Group. Thank you so much. Have a great day.